Good morning. This is Jimmy Jabbour, Senior Technical Analyst here at Oxshare with the daily market analysis. We're going to start with the economic calendar. Uh, we're going to check what we have news. This is going to be a big week. We have the CPI tomorrow, I think. We'll check it here. FOMC members who speak today, I don't think will have a big impact from it. I think the markets will move a bit, especially when Barkin speaks, the FOMC member, and then we have Bailey for the BOE. Tomorrow is the big day. We have the CPI, the inflation measure for the United States. This is the preferred report that the FOMC base their expectations on, depending on whether we're gonna increase the interest rates or not. Maybe show some improvement there, reinforcing the interest rate cut scenario for the upcoming month. Then we have the PPI for the British pound on Wednesday, and I think on Friday we're gonna have the PPI for the United States. Big week. Lots of information, lots of big news coming up. So we're gonna start off with the markets now. This is the daily analysis, and we're gonna jump right in. Okay, so we're gonna start off with the DXY, the dollar index. We're gonna start off at daily to see where we at. So as we can see, due to Jerome Powell not increasing interest rates and not confirming the rate cuts for the upcoming months, the market took that as an indecision by the Fed. As we can see here, the DXY just jumped. We just broke structure. So this lower high here just got taken out by this high, and we may have started a market structure shift. So we can expect maybe a small retracement up to the 0.5 level, where the DXY has left this gap. And as you can see, we just tapped into this gap here. So you can see here, we just tapped into this gap. I can expect maybe a move downward here, and then we push up, taking out these liquidity levels. As you can see, this is a break of structure here. This is a change of character. We changed from a bearish to bullish on the daily, and that is big news for the dollar. Of course, as we increase in the time frame, the market structure shift will be more predominant. So as you can see, we changed characters here. So this is a break of structure. Clearly, we broke this high, and we have clear levels of liquidity forming at these relative equal highs over here. So these relative equal highs, you can see here and here. Yes, and we have this fair value gap right here that we filled. Of course, I'm expecting a small retracement, and then the consequent encroachment, I mean here, the midpoint of this fair value gap. So the midpoint is right over here. So I expect the price, maybe we can push right now and then tap back to this volume imbalance, this gap over here, and then maybe push up again. So this is for the DXY. We're gonna jump off to the Euro USD. Of course, we have these clear levels of support. So we tapped once, then we broke structure. Of course, with the news that the FOMC and Jerome Powell will not cut rates, we started to see the market react over here with the move downward as the dollar increased. Of course, this is on the daily. We can expect a push to the downside, maybe reaching for this order block or this supply zone. Of course, these relative equal lows over here. As you can see, the market respected these levels. So liquidity is being formed at the daily. Liquidity is being formed at the daily time frame. So the most probable scenario is that we're gonna dip below these points of liquidity here and here to this order block, and then we're gonna move to the upside. Okay, so as you can see here, we are dipping down now. The 1.0723 level is very important. This is where the liquidity area of the daily is being formed. These areas will probably be taken out. This order block should be respected before we push up again. Maybe after the FOMC, maybe after the CPI. If the CPI was bad for the dollar, we might see after the dip a push up for the euro. That explicitly say that the FOMC will begin to think about cutting interest rates in the near future. So this is one point. So this is on the daily. We can have another look at lower time frame just to have a better understanding of what the market is doing. So we're gonna go to the 1 hour time frame. So these are the levels that was shown on the hourly, on the daily, the lows that have been respected, as you can see here, here and here. Okay, so we have also a flag pattern forming at these levels, and we have this huge NFP candle. As you can see here, this is the NFP candle. We have this huge gap that was formed, and the midpoint for this gap is around 1.0847. So there are two possible scenarios. We might respect this channel and continue to go up until we reach this point over here. This gap is a big gap. We may take some time to fill it. So after we reach this point, we might see a break from this rising channel or this flag, and then we would take out these liquidity level, targeting the order block that was mentioned on the daily, which is around this point over here. And if you want to combine the classical technical analysis that depends on patterns, so we can take the measure here from here and then extend it from this point, and there you see it. It perfectly hits that order block or that supply zone. So for the time being, I'm just observing the markets. There is no clear entry points at this time. We might respect this channel going upward, and we might break down, take out the liquidity now, take out the liquidity, and then target this fair value gap before moving to the downside again. Okay, so this is for the Euro USD. We're gonna jump to the gold. We're gonna check the daily first. So a consolidation is being formed here for the gold. As you can see, these levels we are being so this could be a rising flag. Of course, gold is very sensitive to the general news. We have talked about in the previous sessions that this gap would be respected, and more clearly we can see it on the 4-hour. So as you can see here, we have this gap, and the midpoint of this gap, the 0.5, which is over here. And you can see right here that we respected this gap. We just dipped, we wicked below it. I don't know if it's clear. I'll zoom in a bit more. So we just dipped here, touched the line, and then moved to the upside. Okay, so this is regarding gold. We have strong, as you can see here as well, we have this gap after breaking to the downside. So we broke the downside, we took out this low, we formed this big wick, and then we dipped, we entered this this fair value gap over here, and then got rejected, taking out these levels of liquidity. We're gonna jump into the lower time frames, to the 15-minute. So this trade here, we've discussed it the past week. As you can see, the same concept applies at lower time frames. So we took out this low over here, okay, and with a big push to the downside. It was a push down with momentum, leaving big gaps, leaving big red candles. So this gap over here got respected. We had this low levels of liquidity. See these relative equal lows here and here and here. So it's being respected. One thing that could have been taken out in this trade would have been a short position at entry here when we first touched stop loss above that high over here, and then we have targeting these lows over there. So price always seeks to rebalance. So as you can see over here, we broke down and price pushed back up to rebalance. A good entry would have been at this point, stop loss above the high, and then we target the liquidity below, as you can see over here. At this point in time, we have some liquidity levels forming at this point. So these equal highs our targets for the price. So we might see a push up before going back down again. Of course, these are targets for the price. Price is attracted to liquidity pools. We want to see this move up, taking out these liquidity before pushing back down. We're gonna jump off the US 30. So this is the US 30. So we have respected this pitchfork. So this is the mean. This is the midpoint of this range. This is one standard deviation. This is two standard deviation. Of course, the exponential move of US 30 in this wave respected the pitchfork. Over here, we can see these lines respecting this level of resistance. Of course, we had support at these levels over here. And as you can see, this order block got respected. We tapped into it and then pushed to the upside. Of course, we are making new highs regarding the US 30, and that is because the US economy is so strong. We had good financial reports coming out from the big tech companies and big companies in the industrial complex. Yes, this is the reason US 30, NASDAQ, and S&P 500 just hit the 5K mark, I think, for the first time. So yes, big movement from the US indices, and that is foreseeable. First, because we had the incentive from the Fed that we might cut interest rates in the near future before, of course, retracting the statement. Then we had good financial reporting, fiscal reporting for the big companies in the United States that pushed the price upward. Yes, and this is why we saw the big movement in the US indices. We expect, as long as we hold above key levels in the US 30, the 38,400 level, we might see a continuation upward before having a correction for this big wave. So this is a big wave. We had smaller corrections. We expect a correction, not shifting the market structure, of course, but with news coming out that may be beneficial for the economy, maybe inflation going down, Fed deciding based on data that we're going to cut interest rates in the near future. I think that would propel the indices upward more than we've seen this year. So be prepared. This is all for now. We'll be back at 3 o'clock with the Arabic version of the technical analysis for the markets. Stay tuned, and thank you for watching.